Now we are less than 8 hours from new tariff measures going into effect, including a 104% tariff on imports from China. That is a major production hub for Apple. Joining me now is Craig Moffett. He's founder and senior managing director at MoffettNathanson's. He's got a sell rating on the stock, $184 price target. That's higher than the $172 where it closed today. He downgraded Apple in early January, in part because of tariff concerns. Good call, Craig. So tariffs are like a profit-sucking hot potato. Whoever gets stuck holding it gets their profit zapped. Now, between Apple's assembly in Asia, components from around the world, wireless carriers, Apple has the best power to force others to eat tariffs, but it also itself has the greatest capacity to weather this storm. So what should Apple do?
Well, so first, good to be here, John. Good to see you. Look, this is a fortress balance sheet company. It's got a wonderful consumer brand. No one is suggesting that Apple is on the brink of extinction. The challenge is there are no good answers when you're talking about very high tariffs in a country where not only do you do the vast majority of your production in China, but you've got a 15 to 20-year investment in building the capabilities to have that kind of production in China, and that's simply not replicable anywhere else. All the production, if it were to shift over to India, would provide less than half of the U.S. demand for iPhones alone. That's a start, I suppose, but you simply can't take a company that has, by most estimates, 3 million people in China working in the Apple value chain and think you're going to move that to the United States in 1, 2, 3, 4, even 5 years. It's just not possible. So if you're going to have a significant regime of tariffs and China is going to be targeted, there aren't good answers for Apple.
You touched on something I want to go back to. I covered Apple for a bunch of years. I would argue it is impossible to make an affordable iPhone in the U.S. in the next 5 years, probably impossible in the next 10. And that's because even if you use robots to replace those millions of people in the iPhone ecosystem in Asia now, you need 1 million people in the U.S. probably to run the robots and service them. And the people with the skills to do that live in Asia. If an automated iPhone factory is possible, it'll probably be built in China before it's built in Arizona, right?
I think that's exactly right, John. You can easily underestimate just how much capability development is required. This is not a question of can you pour the cement and even can you requisition the robots. There simply isn't the capability in the workforce. And the sheer numbers that we're talking about of people and the wage rates make it untenable to think that in any realistic time period you're going to shift production here.
So, in a sense, it seems like, and I could be wrong here, the Trump administration is replacing economic development with tariffs. And normally you would fund higher education, you would incentivize factory development to build up an ecosystem where these skills would be available, expecting that you plant this seed and 10 to 20 years down the line, you have an ecosystem growing there. Is there a possibility of adding those kinds of economic development incentives onto tariffs and getting there?
I suppose. And by the way, it could work in either direction, right? If you more gradually build up the demand will eventually create the supply. That is, if there is the demand for jobs, eventually universities and vocational schools and that sort of thing will start to fill the demand. So there's different ways to get there, but when you're talking about sociological developments of that magnitude, those are not 3 and 5 year projects. Those are 20 and 30 and 40 year projects.